Hello and welcome to Wrestling with Real Estate, where we look to choke slam all your real estate problems. I'm your host, former WWE wrestler and now Circus Arena performer, and of course, multifamily real estate investor Barri Griffiths. Now today we're joined by Perry Zheng. Hey Perry.
Hey, how's it going, Barry?
It's going fantastic, man. Excited to have you on the show. For people who don't know, can you sort of fill them in about what you've been up to, where you are in the world, and all that good stuff?
Sounds good. Pleasure to be on the show. Super excited. My name is Perry Zheng. I am a syndicator. I live in Seattle, Washington. Been here for more than 10 years now. I come from a tech world as well as a syndicator of 840 units as a lead syndicator across 4 deals. Also passively investing more than 2,000 units. Started real estate investing in general 6 years ago and kind of scale up from there. In my professional career, I am the founder and CEO of Cash Flow Portal, a real estate syndication software. And prior to that, I was an engineer manager at Lyft, where I worked there for 5.5 years. And then before that, I was a software engineer at Twitter and Amazon. So a very interesting combination of technology and real estate.
Yeah, it is. It is. What got you started with real estate? I think that's always an interesting question because there's always something that sparks that interest. Sometimes rich dad, poor dad. Sometimes someone advises them, hey, you should look into real estate. It's always something different and it's always interesting. So how did you first get started in real estate?
And why? Yeah, good question. I started buying a primary residence back in San Francisco when my only goal was to buy a house so that my monthly mortgage is less than my current rent. So I bought a 3-bedroom condo in San Francisco, $750K. It's got 3 bedrooms. I rent out the other 2. I live in the master room, and my rent was less than what I will have paid in rent. My effective rent is basically my total income and minus my mortgage, right? And so I thought that was not that hard, and I was willing to live with housemates. And then I kind of caught the bug and started reading Rich Dad Poor Dad, started listening to the podcast, Bigger Pockets. That's how I met my business partner. That's how I decided to buy one more primary residence. And that hobby became an addiction. I start buying 1 single family every year. And now I have 6 single families in Seattle and San Francisco areas.
Very interesting. How we're out of interest on, you were buying one every year. Were you using a primary residence financing, which is, a huge plus,
yeah.
Right?
Yeah. I think I hacked the system. I was using primary residence. So I quote unquote move every year. I did move every year. And after 5 or 6 loans, the lenders actually don't like it anymore. So that's when I had to switch to multifamily out of necessity.
Okay. So that was where multifamily came in. It was, you can't get any more loans. Not that you can, but it was becoming more challenging. So you're like, where can I go from here? Is that kind of how it came along?
Yeah.
Why then multifamily? Why did you choose more? Because it could have gone any other way: flips, mobile home parks, self-storage, industrial, any kind of investing from there, right? What attracted you to multifamily?
Yeah, great question. Part of it is luck. Part of it is by chance. I went to some mentorship training back in 2018. And that's when I was buying, I think on my 3rd or 4th single family. So I know the end is coming, as in at some point, I'm not gonna get more single families. The second part is I felt after a few years, you start gaining knowledge, and there should be a way to capitalize on your knowledge. And real estate syndication is kind of the perfect way to capitalize on that knowledge, right? You know a lot about just real estate in general, how to get the best vendor, how to renovate, how do you watch for capital expenses, etc. And multifamily seems the right way to scale. And I was drawn into the kind of the low risk or the recession resistance of multifamily. Now, you had a fair point of why I didn't go into, say, self-storage or commercial or like triple net or whatnot. I think one philosophy that I have is I tend to be drawn to things that are mainstream and not try to be like there are only so much like self-storage and so much mobile home parks in the world. And it doesn't really I also don't have personal experience with those, so it's there's no product founder fit, if that makes sense. And I'm drawn to things that I can relate to, and I see multifamily everywhere. I used to live in an apartment complex, back in the day, so I kind of know what it is. And it also has the most amount uh, of market dominance, right? At the time, there were a couple other choices. I could have gone into Airbnb. I could also have gone into flips. The reason I decided against flips was it felt like a full-time job. And when you do the math, your ROI on time is much bigger with multifamily. It's almost infinitely scalable. Whereas with flips, you're done after one project and the income stops and you have to keep continuously work. I didn't go to into Airbnb because in Seattle, at least, you cap at 2 Airbnbs a person, right? So there is an upper limit on how you go. So the general principle I had is go into something that there's enough runway for what you want to achieve. You don't want to be like so good at Airbnb. Yeah, it makes like 2,000, 3,000 a property. That's a lot, but like if you can only have 2 properties, then you kind of cap on the upside.
Yeah, I love that thinking. I love that train of thought, because it's one thing to think, okay, this type of investments gives me this kind of ROI, this kind of cash on cash, this IRR, but how scalable is it? And what are my goals? What am I trying to do here, right? What is my objections? And you want to match your objections to your investment philosophy and your investment types and investment criteria. So I was really smart that you were able to do that, because like you said, you may have gone into Airbnb and made great money, right? 2,000-3,000 per property. That's great, right? But then you can only get 2, and where do you go from there? And then you're stuck and you have to reinvent the wheel or kind of go from there. So I think that's really smart of you. How did you get started in multifamily? So you decided multifamily, you talked about the thought process that went into that. How do you get started? Because getting started is challenging for a lot of people. A lot of people are stuck at that, crossroads. Okay, I want to invest in multifamily. I know it's the right choice for me. It makes all the sense. How do I get started and where do I go from here? So how did you get started and which way did you go?
Great question. I'm pretty real when it comes to the requirements for multifamily. So I'll tell you how I got started. We bought a 7-unit as a joint venture in Tacoma, Washington. It was a $540,000 deal. We put in $130K for about $680 total. And a year and a half, we kind of like flipped that and we sold that for $900K. And we returned our investors like 60% return in a year and a half. And so we thought, okay, this is not that hard. And, it is a 7-unit multifamily, but it's cost the same amount as a single family in Seattle. So it was like kind of a small scale that we start playing with. So then the next project we want to do was a 20-unit, $3.2 million in Seattle, Washington. And we got outbid on that deal. We worked really, really hard, got the lender, everything, and we're ready to, get it under contract, but we got outbid by one of the higher bidders. We found out that bidder had like a huge portfolio in Seattle, like maybe a $50 million portfolio or $100 million portfolio. They have their own property management company. And then we realized there are different levels to this. And we are just a small fish in a pond, especially in Seattle. So I thought to myself, I could pay $50K more to win this deal. Right, it's the $3.2 million. I can pay 3.25 to win it. But if I gonna pay $50K more between me and my business partner, why don't we spend that $50K to get a formal education? And so that's why I decided we went to the mentorship group. In the grand scheme of things, yeah, it's $25K each person, but it's like tiny compared to the rewards that we end up getting afterwards. One thing I do want to say is, people are really into real estate syndication now. I still believe that in 2018, not many people knew about it. And even today, a lot of my investors don't really know about real estate syndication. It is not a is still not a household name. That's because the whole field of real estate syndication is only started back in 2012 and got popularized in 2014, 2015. So I think we're still in the gold rush of this kind of industry. So there are a lot of players, there's a lot of segmentation, but even today it's still early. It's early in the game. So it's not too late to get started.
I think that is such a great point, because I think people like us, we consume podcasts, we surround ourselves with people that are in the real estate world, and you just, you hear about this all day. It's on your social media feeds, it's in your ears, it's in everything that you read, right? So we're in it and we think, okay, everybody must know about this because this is all we see and hear. But the reality of it, you get out of that real estate bubble, very few people actually know what a syndication is, or even heard of it, or understand how it works, or know the benefits of it. And really, it's a lot of people find it hard to believe that this actually truly exists as a real thing, not as a scam, not as your Ponzi scheme, not as any of those things. And I think people like yourself who are out there educating people, giving them the chance to be part of a syndication, right? And that's the great thing. Really, we're bringing these deals to people, right? You're helping people out. You're giving people an opportunity to be involved in a syndication that might normally never have heard of it, might never have found it, might never be involved with it. And they get to be involved in this great deal. They get a pref return, they get an IRR return, and, they're improved tax benefits and debt pay down, all the great stuff that goes along with owning real estate without any of the hassle of actually owning it. And it's just such an amazing thing and such a powerful thing that, that's one of the reasons I wanted to start this podcast, because I felt like so many of my friends and family and people that I know didn't really understand real estate, didn't understand much about it at all. So it's really cool. I'd be interested when you speak to someone for the first time about syndication, how do you explain it? Because it's sometimes challenging to explain it, right? What is your, not necessarily elevator pitch, but your explanation of what a real estate syndication is to people? So for people, there might be someone who's listening to this who doesn't fully understand syndications.
Yeah. So great question. So first, I am in the tech industry. My investors are very quiet, affluent. I'm very, very grateful and lucky in that respect. I also have I think a good reputation. So I have a good track record and all that. So to begin with, I just told them I am investing in multifamily real estate. And this is like for your listeners who want to bring this topic up to your investors. What I don't do is I ask them for money. I do not ask them for money. I just say I am looking into real estate. I have done some single families, but multifamily is what I can scale. And I say the return is 6 to 8% cash and cash, and the total return is like 10 to 15% IRR. Okay, I am super conservative. We've been projecting 10 to 15% IRR for the last 3 deals, and the first deal is looking at 100% return in 2 years, whereas we're projecting 80% return in 5 years, right? So, but I still keep it that way. What I found is that with most people that is in my circle, they are perfectly happy with the 10 to 15% IRR, for better, for worse. Because, there are lots of investors, and some investors, like the young investors, if they only have $100, 10 to 15% is like nothing. But if they have $1 million to $2 million, 10 to 15% consistent and reliable return is like amazing. You cannot find that anywhere. Honestly, you cannot. So yeah, S&P gives you 8%. We give you 10 to 15%. That's not bad. So just by saying the return and having confidence on that return is already enough to draw a lot of the investors out. And you want to wait for them to make sure they are curious. Don't ask for money, because more often than not, they're gonna be in the one popping the question, next time when you find something, can you let me know? That's what you want to wait for. So I don't ask for money until we have a deal. So that's to your question on like, how do you talk about it? But if someone were to ask me to answer your question directly, what is real estate syndication? There are 2 ways to answer it. One is it's basically investing in an LLC, and that LLC owns the real estate. You don't own the property, you own shares of the company. And so it's literally like any corporate company that you're buying in stocks. but it just happens that that company is investing in a single property, right? It's a single purpose LLC for that asset. There are all kinds of vehicles, but for simplicity, is that. And second is, okay, well, I can do that. Why don't I invest in REITs, real estate, trusts or funds? And the way I explain that is REITs are like mutual funds. And what we are doing are like hedge funds. REITs have so much overhead and they only give you 5 to 6% return, very consistent. But we're like hedge funds because we are just starting out and we are going after single properties, single multifamilies. And so you're going to expect a higher return from folks like us. So that's how I will explain it.
Very cool. I thank you for explaining both of that, because it's important. As syndicators, how you talk to people, right? Like you said, you don't ask for money. People are going to run a mile away if you start asking for money. It's you're presenting opportunity, you're educating them about the benefits of it and getting them comfortable and understanding what their goals are as well. And all those things help get people comfortable. And the know, like, and trust triad, right? I don't know if you've heard of that. There's know, like, and trust. Just they've got to know you to be able to like and trust you, and all those things are important. So I appreciate you explaining. And it's a challenge explaining what a syndication is. So, but I think you did a great job of that as well, just for people who sometimes don't have trouble getting their minds around it and understanding. What's been some of the biggest challenge you think you've had going from the single families to then these larger syndications for you personally? What's some challenges you've had along the way?
Yeah. To the people who are, considering multifamily, it's easier than single family. Let me get that out of the way first. I will first explain the challenges of single family, right? I am buying a single family right now because I like buying single families because they appreciate. They may not have the best cash flow, but I think if they're good properties, I diversify single family and multi. I don't know. I think it's because of COVID. The lender called me to make sure that I don't have any forbearance on any one of my loans, and they couldn't get that information. So the lender called me and they called each one of my 6 banks to make sure I don't have forbearance. I spent freaking 3 hours on the phone to call every single bank. So if you ask me what is easier, multifamily is way easier. They do not care about how much you make. They do not care about debt to income ratio. They only care about your net worth and liquidity, right? So that already is much easier, right? So there's that. There's a lot, in my opinion, less paperwork in multifamily than in single family. There's a lot less arbitrary constraints that they put on, like what counts as debt and what counts as income, right? So I actually like multifamily a lot better. But for a aspiring syndicator who want to become a full-time or like part-time syndicator, and by the way, do part-time first, don't go straight into full-time. Net worth is actually a big thing. It's a very matter of fact numbers and competence game. There's not a lot of fluff in multifamily. So if someone comes to me and say they want to be a syndicator and they have, say, 100K in net worth, the chances are like it's probably not going to work for you yet. You don't have to be accredited to be a syndicator, but like the fact that you are accredited says so much about you, right? Like it shows that you are able to be financially literate. You're able to make something out of what you have, and you're able to get a good job and a good income. So I will expect them to have like more than $1 million in net worth. And I will expect them to be able to raise at least $1 million. And so those will be the biggest ones, right? And if you're not that yet, I will suggest that you start doing small multifamilies and not go into the 200 plus units yet. So it's very, very matter of fact. It's very competency driven. Yeah, those will be the biggest challenge. It's just like, how good are you? How long have you been in? How much real estate and how much financial success do you currently have? Because you have to be at a certain level before playing in the large multifamily syndications.
Yeah, and I think that's true, and I think it's sometimes gets played down that okay, you just start in a 200 unit multifamily syndication. You have no real estate background, you have no real estate experience, you have no success, you have no track record. You know, it's not going to go well. You can be involved maybe in a team and play a small part in that, and that's a great way to kind of get started and learn the trade. But at the same time, if you have nothing to provide to a team either, it's kind of challenging. So I think it's great advice, especially what I love the path that you went on. You went on started with a SAM unit, created a lot of equity in that, and then kind of grew from there, right? And you grew into that. And you had the single families even before that. So what, you got used to it because, it's all real estate, right? So even if you're doing single families to start off with, that experience helps you when you go into multifamily. It's a different animal and it works differently to some extent, but it's still real estate and it's still rental real estate. So if you're able to figure that out to start off with, it definitely helps you.
I would say it's very similar. At the end, it's still renting, treating tenants correctly, treating them right, like be firm, but be respectful, give them a good product. It's very, very similar. Yeah. So
Yeah.
great point. Like you have, $1 million of real estate before venturing into multifamily. And to me, that is an amazing foundation to someone who never done real estate and want to get into multifamily. I'm like, you can do it, but just be careful.
Yeah, very true, very true. Now, something we haven't touched on yet, and we're going to touch on a lot more in the second part of this episode, is you have a cash flow portal that you created. Being in the tech world, I'm guessing it made sense, and you probably saw a gap in the market. But without going too much, because we're going to do a deep dive into all things portal related and your portal in the second part, just give a brief synopsis of why you decided to make a portal, why you decided to create that, and how that came about.
Yeah. Cashflow Portal is a real estate syndication software that helps syndicators streamline equity raising, raise money faster, as well as automate the back office. I started because when I was doing my 172 unit, we had about 70 investors who invest $4.5 million. So for every single one of them, I send them a DocuSign. I get the signature back. I countersign it. I put how much they invest into my spreadsheet. I send them an email of the wire instructions. I send them another email saying that wire has been received. And then every 3 months, I gave them distributions. And they have to keep track of their distributions in their own spreadsheet, right? I wish there were a system of record that they can just log in and see how the property is doing and how much money they have received and how much their investment is currently worth, right? And that also make me come across as professional if I have a portal like that. Now, I could have used like our solutions out there. But at the time in 2019, it's exorbitantly expensive. It will have been $1,200 per month for a single property, because the pricing model they had is $1,200 for up to 5 properties. And if you only have 1 property, it's still $1,200. And as an early syndicator, there's no way I will pay that amount. And I also believe that this is a green field, and this is something we're just getting ourselves and still at the very early stages of an industry. So I decided to build my own. And I think that we have built a great product that is really, really easy to use. And that's being validated by a lot of the customers coming to us now.
Very cool, very cool. Well, we're gonna, like I said, a little teaser for you guys in the second part of this. Stay tuned. You're gonna listen to the next one, because we're gonna really deep dive in, get into the nuts and bolts of everything and the benefits and how it works and all that great stuff. So I'm excited about that. But are you ready for the knockout round now?
Yes, absolutely.
Okay, yeah. Let's do it, man. So what would your wrestling name be?
Yeah, so my signature will probably be, I know you have the options of like networking, finding deals, underwriting, and like raising equity. Tactically, it will be raising equity. I can raise quite a bit of equity, and we have good reputation for that. But I think my biggest strength might just be, go get it, as in I just make something happen. And I don't believe that there's no way to do anything. There is a way, it's just how much you want it. And so I'm usually the one who, in face of obstacles, find a way and figure it out. That will be my superpower in a way.
Cool. So that's your signature move. But going back one question, what would your wrestling name be? If you came up with a wrestling name, I don't know if you're familiar with wrestling at all. They all have like crazy names like Jake the Snake, Hulk Hogan, Ultimate Warrior. So I don't know if you have a nickname or something your friends call you or anything like that. So I don't, yeah, maybe you have a
could
wrestling.
be good question. Sorry,
It's okay. It's okay. This works.
Could be Perry the Maverick. I make things happen.
Okay. I like it. I like it. I like it. I like it. What's been the biggest body slam you've taken in your real estate career? So something that went wrong, something that unexpected, or something that felt like a punch to the face.
Yeah. On the second deal, we did not choose the right property management company. And it took us about 3 months to let go of that property management company. In the grand scheme of things, that could be pretty decisive that we made the decision 3 months into the partnership, or it could be a little bit too slow. We should have made that in a month into it. I think we actually were on the decisive side. And now the new property management company is doing really, really well. The property is back on track, and there is, and I continue with our distribution. Nothing really takes a hit. So the lesson there is, property management company is the single most important partner that you'll ever have in multifamily, because you're not managing the tenants yourself. You're technically managing the property management company, who then manage the regional manager, who then manages the on-site manager, who then manages the maintenance folks. So there are like 3 layers of indirection. So be very careful about what you who you partner with in as a property management company. And that's why one of my dreams is actually to create a property management company so we can control the quality of our assets.
Cool. Yeah. I think property manager can make or break a deal. Like, you know what I mean? You hear it all the time. A good property manager can turn a bad property good. A bad property manager can turn a good property horrible. So, yeah, great piece of advice there. And thank you for sharing that story. So was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Good question. I think the biggest one is the decision to quit my job, my W-2 job. Now I work in tech. I have what's called the golden handcuff, or a golden cage, and it is really difficult to break through, right? Because by definition, I am at the peak of my career. By definition, my income still made up way more than 70-80% of my total income. And to scratch all of that and go into a startup that doesn't make didn't make that much money, and we have quite a bit of expenses. It was very scary, and I had a job ever since college. So that's the corporate job is all I know. And I learned a lot, I grew a lot, and I wouldn't be where I am without it. So it was very hard to give it up. However, I did the analysis and all that, and it's like, yeah, even if my startup fail, I can probably get a job very quickly. And second is yes, I might be giving up a tremendous amount of like salary and pay, but if the startup is successful, I can be rewarded 10x or 100-fold back, right? So there's that. So I left about 3 weeks ago, and I am happy to report that the last 3 weeks were probably the happiest times in the last like year and a half professionally, absolutely, and personally. I was joking to my parents that the first week after I left, I worked 60 hours that week. And I told my parents that is the easiest week I had in the last year and a half, because basically I was doing 3 jobs. I was doing Lyft as an engineering manager. I was doing my startup as on the weekends, mornings, evenings, midnights, and I was doing syndication. And now I only had my real estate and my startup. As I spend way more time in the startup than in real estate. So yeah, definitely felt so much liberated. And I also noticed that the startup is doing really well after I got into a full-time. Yeah.
Very good. Well, congrats on leaving your job, and congrats on, on everything that you've done, man. And it's a cool story. Excuse me. And like I said, we're going to cover the portal in a lot more, with a lot more time in the second part of this. But before we go, if anyone wants to reach out to you, if anyone wants to get in touch or find out more about what you got going on, how can they do so?
Yes, you can contact me, Perry@cashflowportal.com. Again, Perry@cashflowportal.com. You can add me on LinkedIn, on Facebook. It's Perry Zheng. Yeah, I'm always very happy to chat with investors and syndicators, whether as a customer or as just a future partner. I'm pretty generous with my time, and I always make time for just interesting conversations.
Very cool, very cool. Well, thank you for making time for us today. This has been a fun conversation, and like I said, I'm excited about part 2, so stay tuned for that. Thank you, man.
Yeah, Chris, thank you. Thank you for having me.